Gold, an age-old investment avenue, has stood the test of time as a store of value and a hedge against economic uncertainties. As the world's financial landscape evolves, more investors are turning to gold to diversify their portfolios and protect their wealth. What does Nikhil Kamath, co-founder of Zerodha, think about gold as an investment option?
This year, gold did have a run till March. Again, it is sort of topped out at $20-50 and come back to, I think, 1800 or so. So one theory is that because there is a lot of financialization of gold that has happened, that it is also sort of mimics the overall financial market. So there is escalation in equity prices, gold goes along, and therefore it might not be an alternative to the dollar or financial assets in general. So do you still hold out a bullish case for gold?
I do, yeah. I think you're right. I think historically there was a very visible inverse correlation between gold and equity markets. At some level that line has blurred. Now often gold goes up with equities and gold goes down with equities. Just because of how bad the inflation problem today is. I think if you go back in time, if you had X amount of gold required to buy a house, in the 60s you needed some amount of gold. In the 70s you needed lesser amount of gold to buy a median house. In the 90s lesser. And today again, you need lesser gold to buy a median house than you did in the 70s maybe. So gold has a great track record of having beaten inflation in a way. I think it might no longer be a hedge against equity markets, but against inflation, one can assume that it would be a good place to keep money. And for that reason, yeah. And alchemy is something which people have attempted for a long time. And I know nuclear fusion might have a byproduct which is partly gold or whatever, but I don't think there is a real justifiable way in which somebody can make gold. So to the truest form of the word, I think it's still finite in the world. And the cost of mining to the cost of the price at which gold is sold, the arbitrage is not too high then. And for those reasons, I think gold will continue to retain value. And as countries like India and China do better and GDP per capita goes up, culturally we are so aligned to gold that I think we will be really big consumers of gold when that were to happen, outside of all the utility it has in industry. So for many reasons, I think I continue to like gold, and I buy and hold gold. I keep like maybe 15% of my portfolio in gold all the time.
Okay.
I think what we need is a more efficient way of buying gold. I think that's the problem. I don't see why gold funds in India need to charge 60, 70, 80 bips to manage a gold portfolio. I get that there is a vaulting cost and there is insurance and all of that. But if you're charging 60 bips a year, you compound it in 5 years, you're paid 4-5%. I don't think somebody should be paying that much money to hold a gold bond. I think somebody has to come and kind of like disrupt that space.
Okay, so 2 questions. In what form do you prefer to hold gold? In what form do you hold gold? And secondly, is that an opportunity for Zerodha?
I don't know, maybe, but I buy, like this SBI has gold bonds, Nippon has a gold bond, the people who charge that 50 to 70 bips, and I buy it through them. I don't hold any physical gold because I think that'll be a nightmare to kind of like make sure it's safe and all of that. I hold.
Gold has captivated humankind for centuries due to its intrinsic beauty and rarity. Across civilizations, it has been treasured as a symbol of wealth, power, and prestige. Beyond its allure, gold has proven to preserve value over time, making it a reliable asset in tumultuous economic conditions. Its limited supply and global recognition contribute to its enduring value, providing investors with a tangible and timeless investment opportunity. Acquiring physical gold in the form of bars, coins, or jewelry has been a traditional approach to gold investment. This method offers tangible ownership and provides a sense of security. However, It also entails considerations such as storage, insurance, and authenticity verification. Gold exchange-traded funds offer a convenient and cost-effective way to invest in gold without owning physical assets. These funds track the performance of gold prices, enabling investors to gain exposure to the gold market. ETFs provide liquidity, transparency, and flexibility, making them attractive to a wide range of investors. Investors seeking professional management and diversification can opt for gold mutual funds. These funds pool money from multiple investors to invest in a diversified portfolio of gold-related assets. Professional fund managers make informed investment decisions, alleviating the burden of individual research. Investing in gold mining companies can offer exposure to the gold sector's potential growth. However, it carries additional risks related to company-specific factors and operational challenges. Thorough research and analysis are crucial when considering individual mining stocks. Understanding the factors influencing gold prices, such as supply and demand dynamics, inflation, and geopolitical events, is essential to help investors make informed decisions. Like any investment, gold carries risks. Diversification across different asset classes and regular portfolio rebalancing can help mitigate risks associated with gold price fluctuations. Gold investment is best suited for long-term wealth preservation rather than short-term speculation. Investors should have a patient outlook and consider gold as part of a well-rounded investment strategy. Gold investment holds a prominent position in the financial landscape as a timeless asset with the potential to safeguard wealth and provide stability. Understanding the historical significance of gold, exploring various investment avenues, and considering key factors are vital to maximizing returns. Whether through physical ownership, ETFs, mutual funds, or mining stocks, gold offers an opportunity to diversify portfolios and navigate uncertain economic times. By embracing the art of gold investment, investors can unlock the potential of this precious metal and fortify their financial future.